So we're going to get going now. So welcome everyone. I'm Liquid FX, and if people can't hear me, just shout, just send a message in the voice. So welcome everybody. My name is Liquid FX, and pleasure to be here. I want to thank Stace for allowing me to be on this stage and just sharing my gems with everyone. So Stace reached out to me a few days ago. I think it was Tuesday, right, Stace?
That's right.
And yeah. So yeah, Stace reached out. Stace FX, I should say, reached out a few days ago. Just consulting me about ICT. So I'm an ICT trader. I've been trading ICT now for well over a year. I've been trading some other concepts before that, supply and demand, also basics, SMC, and before that was like retail, EMA, all these indicators, RSI. For me, I found my home with ICT concepts, and I can make sense of ICT concepts. Now, I just want to make something clear there. ICT actually derived smart money concepts. Smart money concepts come from ICT. So I just want to make clear that there's no actual difference between SMC and ICT. They're essentially the same trading style. SMC is like a watered down, slightly simplified version of ICT. I just want people to understand that. Is that okay for everyone, right?
No problem.
If you have any questions, please feel free to please feel free to put them in the chat. That will be much appreciated. And as the newcomers come, I will just briefly introduce myself as they come, right? So welcome everyone. Here we can see on my screen, we have the euro dollar daily time frame, right? I'm going to start on the weekly because this is the first ever stream I've done here. So people can see my screen, right? Everyone can see my screen. So here on the weekly time frame, what we have, we're working with bearish overall structure, right? We've been bearish on euro dollar since 2008, right? Since that financial crash in 2008, long before the dollar existed, right? So what we're looking at over here is I've pre-planned a very specific schematic on the right of your screen to go through. But before we go through that, I'm going to manually just go through a few things on the chart, right? So hopefully the background noise doesn't get much, but if it does, I will have to change location, but it should be fine.
Okay.
So here on the euro dollar time frame, what we see is we see a break of structure to the downside over here. We see a break of structure, right? Our structural dealing range, very simply, I'm not going to go over the nuances of how to mark our structure because that typically comes with practice, but everybody should understand the very basics of structure, right? So we have a low over here, then we have a high, and this high has produced a new low. So we have a dealing range. Now, what is meant by a dealing range? A dealing range is simply a high and the range between it, right? So this is our dealing range. Our dealing range from this high down to this low. Does everyone understand that? So this is our dealing range. And we have a bearish dealing range, okay? So this is a bearish dealing range, or you can just call it a structural range. Those two phrases can be used interchangeably. They are the same thing. Bearish dealing range, bearish structural range, right? Now, from here, we need to understand a few things, right? And I've drawn a schematic on the right to help explain that, but I'm just going to go through that in price. Often ask me, oh, Liquid FX, how do I come up with a daily bias? How do I come up with weekly bias? Now, this is where you should start from, and you're correct. Now, the reason we want to start from the higher is because we want to build a bias in price that we can use, okay? We want to create a bias in price that we can use that can inform us on what the lower time frames are likely to do. And this is how we do it. Now, we've established that we are bearish. We are bearish. So we are trading between this high and this low over here. Now, if we because of the weekly time frame, we're going to zoom into price a lot more clearly, a lot more closely, right? Because this is the weekly time frame. So our expansions here will be pretty large. They can last several days and even several months, okay? Even months even. So what we see over here is we see the lowest point euro dollar has ever reached. So this was in September of 2022. Now, since then, we've had a change of structure, not a break of structure, a change of character, should I say. We've had an internal shift of structure. And that is marked over here. Does everybody understand this? Does everybody understand how I've done it? So this is a change of character, right? Change of character. So chalk for short. Does everybody understand how I've divided that? This is our change of character, right? On the weekly time frame. Does everybody understand how I've done that, right? That's pretty simple to understand, right? People understand that, right? So when we see a change of character on the week, we know that for days ahead, we could see bullish price action. And this is what we see. We've seen price bullish from September of 22 all the way into 2023. Most of 2023 was bullish up until this point over here. So now we're in an interesting region, right? So this is where I need to use my schematic to the side. When we have a bullish price range. We have a bearish price range, sorry, from this high down to this low. So this is our, like I mentioned before, this is our dealing range, our structural dealing range, okay? Now I am going to be asking questions because I like to keep my students awake in webinars and stuff. I like to ask them questions and keep it interactive. I've actually given most of the answers. So based off this schematic over here, where do you think price is likely to go on the weekly time frame? Should you have a bullish bias or a bearish bias? And this is going to inform our decision on the lower time frame, but it's very important to start on the higher time frame. Based on what I've given you here on the weekly time frame, and I've drawn an equal schematic over here on the right of your screen, where do you think price is likely to head? Do we want to be bullish or do we want to be bearish? Do we want to be buying or selling? Bearing in mind NFP, and we have no idea what NFP is going to do, but based on our concepts of structure, fair value gaps, which I'm going to get into, and premium and discount, what do you think our buyers? Who's got some ideas? Let's keep this interactive, everyone. So I'm going to be asking people. You can put your ideas in the chat. You know, let's get the conversation started. What do you think the bias would be from what I've shown you so far? We're going to dissect how you can create a bias using 3 ICT concepts. I see one person typing.
Ash is typing at the moment.
Let's get some ideas going. So from here, we have to understand that there's 3 things we're going to be looking at this range. We're going to be looking at fair value gaps. We're going to be looking at structure or our structural dealing range, and we're going to be looking at PD arrays, right? So this is a premium, and this is the discount. Okay, so let me label that again. So this is a premium, and this is the discount. Okay. So Asher said bullish until we get further into the top of the range. And Sam has said buy until the fair value gap. Both of you are correct. 2 different reasons, but both of you are correct. That's great answers from all of you. That's great answers from both of you, right? So when it comes to concept, there's 3 things you want to look for on all time frames because price is fractal and we're going to get into that. You'll see how the concepts I use on the higher time frames will be significant, will be the same as on the lower time frames. It's just on the lower time frame, it's going to be at a faster pace, and we're going to get into that. So as the 2 people have correctly said, we're going to be bullish. Our overall narrative is going to be bullish. And the reason why is because we have fair value gaps in the premium. So if I just combine the 2 answers that we got from Ash and Sam, they're correct, but for 2 different reasons, but they're both correct, right? So we have fair value gaps in this region. So if I just zoom into price has left fair value gaps over here, and over here. So correctly, as what 2 people have said, we want to be buying in the discount up to the premium towards the fair value gap. So our bias is going to be pretty much bullish up to at least here. Perfect. So people ask me, oh, liquid FX, how do I come up with a higher time frame bias? How do I come up with a daily bias, a weekly bias? A monthly bias isn't needed because we're intraday traders, right? But how do I come up with a daily bias? How do I come up with a weekly bias? Well, here's how you do it. So we're going to go through a step-by-step guide on how you can use ICT concept to create your higher time frame narrative, right? So I recommend people get a pen and paper and start writing some notes because I'm going to be going over this in a lot of detail, right? So how do we build a higher time frame narrative? How do we build a higher time frame narrative, right? How do we build a higher time frame narrative? Well, here's how we do it, okay? We want to look at 3 things in price, right? We want to look at 3 things. And I'm going to use a bearish example to illustrate this because we have a bearish example, right? We have a bearish structural dealing range over here, right? We're bearish, okay? We have a bearish structural dealing range. Our highs and our lows are pretty on to mark out. Our high is here. This is our swing high. And this is our swing low, right? Most people can understand this intuitively because you learn this at the very start of your trading journey. You learn about higher highs and higher lows, but it's often diluted in you know the social media society that we live in today. But structural ranges, highs and lows, are incredibly important to understanding your trading. It's like the vehicle to the market. Structure is like the vehicle to your market, and it's the foundation to almost every decision we make as informed ICT traders, right? So this is our high and this is our low. So the first thing we want to establish is our structural dealing range, our structural dealing range. That's very important to identify, okay? We use the Fib tool or the Fibonacci tool, or I even call it in my private community, the premium and discount tool. And the reason for that is because people talk about, oh, the 78 level or the 78.2 level or the 62, whatever those numbers are. I don't even know what those numbers are myself because not needed. You don't need them to be successful when building a narrative using ICT. What you're after is simply the premium and discount. This is how we do it. You're going to be drawing the Fib tool from the swing high down to the swing low, okay? And this is where our concepts come in. Our first concept is understanding the dealing range, right? The dealing range, the structural dealing range, okay? Structural dealing range. So we established that at the start. Our structural dealing range is from the high down to the low. Does everyone understand that so far? Is everyone following me?
Yes.
Hopefully everyone is. If people aren't, feel free to ask questions in the chat. I'll be jumping back between the chat and my charts, right? The first thing we want to understand is the structural dealing range, the high to the low. So it's exactly what we've marked out over here, right? It's from the high down to the low. The same thing over here, right? Structural dealing range from the high down to the low. Now, the next thing we want to look at is our premium and discount arrays, or simply our PD arrays. So the next thing we want to look at is PD arrays. PD arrays is short for premium and discount arrays, okay? These are arrays in price, okay? So premium and discount is very, very important. So if I explain premium and discount briefly to people, when we have a high and a low, this is our 0.5 level, our 0.5 level, or our 50% level, or our equilibrium. This equilibrium. Equilibrium. So what does the equilibrium actually represent? Now the equilibrium represents halfway. It's quite intuitive and self-explanatory. Represents halfway between the high and the low. Now, as a seller in the market, we're bullish, we want to be selling. Intuitively, people should understand we should be selling in the premium. Premium, right? And we should be buying in the discount. Okay? We should be buying in the discount. It's this whole concept of buy low and sell high, right? A lot of people, this is another, it's a very big in the social media era that we live today, right? But premium and discount is the basic, this is like the bread and butter of ICT concepts, right? We're going to be going into liquidity sweeps and fair value a little bit later on in the webinar today, but on the higher time frame, you only need some of the basic ICT concepts to really grasp the higher time frame narrative in any market, whether it's the S&P 500, dollar, GBP, USD, gold, as a lot of people trade in the community. We're going to be going over a little bit of gold as well. But these concepts apply to every single market you can think of. Crypto, you know, it's a little bit wild west, but everything else other than crypto, you can apply this, right? Gold, forex, and everything, right? So the second thing we're going to be looking at is our PD arrays, right? Our PD arrays. So that's our premium, our discount, and our equilibrium. Now, the third thing we're going to be looking at, as someone very correctly mentioned, is the concept of fair value gaps. Now, fair value gaps is a very ICT kind of thing, right? So a fair value gap, for people who don't know, is an inefficiency in price. So if I like a fair value gap to somebody here, this is what a fair value gap is. I'm sure a lot of people know what a fair value gap is, but I'm going to be going over it, right? So a fair value gap is very simply this over here. So when we see price, when we see the wicks and bodies don't touch, right? So we see, for example, we see a wick over here, and this wick over here didn't quite touch this wick over here. Inefficiency price. Price is not delivered in an efficient, fair manner. Therefore, this becomes our fair value gap region over here. So this here is a fair value gap, right? Now, this here is exactly the same principle. It's a fair value gap. Price has not delivered fairly. It's expanded rapidly downward. Hasn't given buyers and sellers fair pricing. It's a fair value gap. It's an inefficiency in price. It's a void in price. Think of it as a void, a hole in price. That price has to go and fill back at a later stage, right? This is a fair value gap. It's a very ICT-ish concept. And it's something that it's crucial to your trading and understanding. It's crucial, absolutely crucial. This is where we begin to draw our POIs or our fair value gap zones or whatever you want to call them, right? This is a fair value gap over here, marked out in gray. I typically mark them out in gray. This is a fair value gap over here that price could look to target, right? And this is another fair value gap over here, right? So it's typically the last up candle prior to the down move, right? So you can have it here or here, it doesn't really matter, right? It's the last up candle prior to the down move. Okay, so what is the significance of fair value gaps? What is the significance of fair value gaps? So fair value gaps represent inefficiencies in price action, right? Fair value gaps represent inefficiencies in price action. We know that as traders, should offer fair value, right? Buyers and sellers should be offered value at a fair price. A fair value gap is a void. It represents price when it doesn't do that. So we need to understand that when building a bias, price is going to spool to, you guessed it, fair value gaps, right? Price is going to spool towards fair value gaps, and that's how we made our bias up here. That's how we made our bias up here. Has everyone understood that? So this is how we build a higher time frame narrative, everyone. This is how we build a higher time frame narrative. So the homework I give to people in the community, and I'll give it to all of you guys as well. I want you to go on the higher time frame on any chart of your choice, whether it's Forex, gold, S&P 500, NASDAQ, even crypto if you want. You can choose any market you want. And I'd like people to come up with 3 different markets where they can highlight to me structural dealing ranges, PDRAs, and fair value gaps. These are the 3 most important things you need on the higher time frame to get involved. Liquidity, not so much, and we're going to dive into liquidity heavily on the lower time frames in this webinar. When it comes to identifying a higher time frame narrative, these are this ingredients to do it, right? So if you want to make a great higher time frame recipe, here are your 3 ingredients: structural ranges or structural highs and lows, premium and discount rates, PVRAs, and fair value gap, FVG. Okay. Has everyone kept up with me so far? If I'm talking too fast or people don't understand, please feel free to ask questions. Background noise is getting loud. Welcome to any newcomers. Have people kept up with what I'm saying? If people have any questions now, because I've gone through quite a lot of information in about what 20 minutes, 15 minutes. So if people have any questions, I'm going to stop now for about three-ish minutes, 3 to 5 minutes, just to allow people to digest that, take screenshots, write some notes, ask me any questions they may have on this topic. This is very important, right? Because people always run to entry models and Asian ranges, ICT manipulation, and all this, all this good stuff, which we are going to get into today. But the reality is, if you can't understand the basics on the higher time frame, you really have no business going into the lower time frame. Because it's very, very important to get your higher time frame narrative and bias correct. It's something that I bang on to people all the time, right? I've made a YouTube video on this as well. So if people want that, they can go there and get that as well. It's all, it's all really, 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 really important stuff. I'll just stop now for another 2-ish minutes. We're going to zoom at 26 past, 27 past. I'm going to let people ask a few questions. What I'm going to do is I'm going to screenshot this as well. And I'm going to copy and paste it into the group as well, so people have access to it. So people could react to that just to make sure they see it. It's in the chat, right? So that's basically the recipe to building price, right? So people could just, Sam North has reacted. Thank you so much. Excellent. Anyone have any questions on this particular topic that we're going through? How's your time to ask? No questions at all? Everyone understood that quickly?
Ash is typing away. Liquid.
All understood so far. All understood so far. So is everyone else in Ash's position where they understand everything so far and everything makes sense, right? Everything makes sense? All clear here. Alan, all clear. All clear. Ben, safe effects. Yeah. All clear and understood, Liquid. Thank you. That's right. Thank you. Again, these are the basic ICT concepts, right? Essentially that's all it is, right? Because when you go on YouTube, Not really in a position to message, but listening in and all clear so far. Yeah. Okay. Thank you so much. What we can do is, if it's all clear so far and everyone's understood, just to wrap up on this higher time frame topic is that, yeah, thank you so much, Ben. It's it's essentially the basics of ICT that you need. Because when you go on the ICT YouTube or when you look at ICT concepts in general, there's going to be so many different concepts, three standard deviations, this standard deviation, and this range and that range. If you can understand the basics of building a higher time frame recipe, which is what's on your screen in front of you right now, dealing range, PD arrays, and F fair value gaps, you're already 60-70% to a good trade. Now it's about going down to the lower time frames and understanding what I call the power of three. And this is what we're going to go through in the webinar, right? Let's go down now to the daily time frame, right? The daily time frame will look extremely similar to the weekly time frame, and it's going to be exactly the same concept. So because everyone's understood this, right? Because everyone's understood this, the daily time frame we're going to whiz through. We're going to whiz through the daily time frame. Okay, excellent. Now, the daily time frame has exactly the same concepts as the weekly, right? So what we've seen is we've seen a break of structure, right? So this low has been violated in this region. So this low has been violated, right? So this is our break of structure on the daily time frame, right? So our dealing range is from, if I use the black dots to annotate, our dealing range is going to be from this high, so not orange, black dots. Our dealing range is going to be from this high down to this low over here. This high down to this low. So we have a bearish dealing range, just like the weekly time frame. We have a bearish dealing range. Now, it's exactly the same concepts where what we do is we have a premium over here, right? If I just if I take it back a step, we have our PD arrays. Our PD arrays is from the swing high. The fib tool goes from the swing high down to the swing low, just over here. Now, our PD array is going to be very simply premium over here. This is our premium. Yep, a discount. Now, obviously, I just want to warn we have NFP, so this is not financial advice or signals or alerts or anything of that nature. Those are bullshit. Signals are bullshit. They don't exist. If you want to learn how to trade, signals are complete bullshit. Absolutely, they're just bullshit. Excuse my language, but they're BS. Okay, so you need to learn how to, because the best analysis will always be your own analysis, not mine, not Stacey's, not Ben's, not Ash's, nobody's. It's going to be your analysis only. Okay, no one else's. We have a dealing range that's bearish. We have premium and discount arrays. So from here, our narrative, our bias is simple. We have a fair value gap over here in the daily premium, D premium. This is our bullish target if we were to be bullish post NFP. If NFP gives us a bullish move, this is where we're going to be aiming for, this POI over here, because it left a fair value gap. So we see a fair value gap over here, right? We see a fair value gap over here. It's deep in premium, so it's deep premium, right? And it's a bearish structural range. So we understand this inefficiencies just higher than us. So our narrative on the weekly and the daily is bullish, unless NFP gives us something different. I just want to highlight that NFP is in about an hour's time. If NFP gives us something different, yes, we have to change our mind. We have to be fluid and adaptable in the market conditions when the news comes out. Okay, so that's important to understand. Brilliant. Now, full time frame, I'm going to go over very quickly because I don't want to bore people because it's the same concepts over and over again. The reason I'm going over this is because we need to understand something called the fractal nature of the markets, the fractal of the markets. So simply put, the fractal nature of the markets, right? Markets are fractal. Markets are fractal. Now, what does that mean? What on the higher time frames happens on the lower time frames. So the concepts of structure, dealing ranges, PD arrays, and fair value gaps. We started on the weekly time frame. We went down to the daily time frame. Now we're on the 4 time frame, and we're going to introduce one more concept that I'm sure people are very interested in learning. What's this, everyone? Equal highs equals. We all know this, right? Equal highs is liquidity in the markets, right? Equal highs is liquidity in the markets. Equal highs equal lows. Stace totally agrees. Excellent. Markets are completely fractal, right? So markets are fractal, right? So everything on the higher time frames occurs on the lower time frames. So let's very quickly dissect the 4-hour time frame concepts that all of you are fully aware of. Okay, so we have equal highs over here. So what is the purpose of me highlighting these equal highs? Why is that important, right? So the equal highs are in trade. But we also have something else over here. What's this over here? We've been through this. What's this massive down candle, this massive black candle? What is that? What is this? Why is this important? Well, it's a fair value gap. But we've been through that the weekly time frame. When we have equal highs over here, the fair value gap over here, right? We have our POI and the discount. This left a fair value gap. This fair value gap has been filled, right? Filled, FBG. It's been filled, right? We're in the discount because this is our structural dealing range, right? From this low down to this high. So what we see over here is we see a structural dealing range that's been respected perfectly. That's been respected, right? Now, based on these two confluences over here, we see a fair value gap and we see equal highs, right? Fair value gap and equal highs. What does that represent to an analyst? Not so much a trader at the moment, because they've not gone over the trading concept. As an analyst, as an ICT trader, as an analyst in the market, what are you observing from looking at this fair value gap and these equal highs and these equal highs, right? So this fair value gap and these equal highs. What are you looking for and why? Days is typing, right? So from here we have to understand it's a point of interest. Yes, correct, right? But why is it a point of interest? Why? What is it? What makes it a point of interest? Let's take Stacey's answer and let's take it a step forward. What makes it a point of interest? Why are we as ICT traders interested in that fair value gap? Why? Why? And I've given the answer previously in the webinar. Target for price to move. Again, Stace, your answer is correct. You're correct. I'm not saying you're wrong, right? But let's elaborate, because by elaborating on your answers, we are going to really dissect what price is going to be doing, right? So I'm going to answer Stace's question, but Stace said the correct thing, right? Now, price moves up for one reason. There's two reasons why price moves up, right? There's two reasons why price moves up. Now, those two reasons are exactly what Stace said. It moves up, but why? Give some logic. Give some logic here. It fills inefficiency, right? That's the first thing. Inefficiency. Fills fair value gaps or inefficiency, right? These are voids in price. That's the first thing, right? Now, the second reason why price moves up is this target liquidity, right? So we know above equal highs, it's going to be what? What's above equal highs, everyone? Scream it to me. What's above equal highs? We all know this, right? We all know this. Liquidity. Yeah, Ash is correct. Perfect. Ash is correct. Ash is correct. Hi, Stace is alive. Yes, it's being recorded. Thank you so much. I appreciate you recording as well. Could you send it to me afterwards as well? I'd appreciate that. Yep, Ash is correct. So it takes liquidity, right? The market moves up for two reasons. It moves down for two reasons as well, but the market moves up for two reasons: to fill inefficiencies and to target liquidity, right? So it's exactly what Stacey said. I'm elaborating his answer so we can understand the inner peaks to how the market actually books, right? So I don't know how much people are aware of algorithms and stuff. So we have something called the IPTA, right? It's the interbank price delivery algorithm. It's something I'm going to go over very quickly, right? So second reason is to take liquidity, exactly what Ash said. Take liquidity, to sweep liquidity, right? Same thing. So in the markets, we have something called IPTA, right? We have something called IPTA. Long name, but it's the interbank price delivery algorithm. Now, the algorithm itself is very simple. It can only do four things, right? It can only do four things, okay? Consolidate. Oh, let me get that back. It can either consolidate first, span, only four things the algorithm can do, right? Now, these are the only things the algorithm can do, and it goes in this order. consolidate, reverse, expand, retrace. Every single day, the algorithm will aim to do these 4 things. I recommend people take a screenshot of this as well. So I'm gonna screenshot this and I'm gonna put it in the chat just so people have an understanding, right? AMD, Stace, yeah, we're coming to the AMD. Don't worry, I'm getting there, Stace. I'm getting that's on the lower time frames. I'm getting there. Don't worry, I'm getting there. I'm getting there. I'm getting there, Stace. I promise I'm going to explain that. Don't worry, it's coming. It's coming. It's coming. I've not forgotten that at all, Stace. Do you look for fair value gaps on weekly? Do you only look for fair value gaps on weekly and daily? Okay, so when it comes to good question, Ash, when it comes to identifying our weekly and daily bias and also our 4-hour bias, I look for fair value gaps on all time frames, but fair value gaps on different time frames have different applications and purposes. So to answer your question, no, I look at them on all time frames, but they have different purposes. So on the weekly and the daily, and even the 4-hour time frame, because those are our higher time frames, fair value gaps are seen as places to target, like I've just explained in the last sort of 5-10 minutes. They have price action. Price will look to target these fair value gaps, right? The inefficiencies in price. The algorithm, the IPTA, the interbank price delivery algorithm, moves up for 2 reasons. To sweep liquidity, like you said, I think it was you who said that, and it's to sweep, and it's to target fair value gap, is to rebalance price. And that's what the algorithm does using in these 4 steps, right? So the algorithm will consolidate, reverse, expand, and trace. These are the only things the algorithm can do. And the reason it will move up, as we've discussed, is to fill a fair value gap and it's to take liquidity, right? So when the market has a reason to move up, right? The market also has a reason to move down as well because we have a fair value gap over here. But if we look at the 4-hour time frame, the market has reason to move up, and the market will always move up for 2 reasons. It's to fill inefficiencies in price, and it's to take liquidity, right? So we need to understand that they're the 2 reasons price will move up. The market moves down for the same reason, to fill fair value gaps and take liquidity. It's the same thing flipped on its head for a bearish market, right? Does that make sense? If we would look at the fair value gap on H4 around 1.093, 1.093, where are we? 1.09, 1.09, 323. Like here? You mean like here? Yeah, you're correct. You're correct. That's not. So I identified this fair value gap because it's the clearest one for people to see on the live stream, especially if you're a beginner. But yeah, you've identified a fair value gap region, and that's correct as well. That's correct. Yeah, you're correct. You're correct. It's not the only thing. There's going to be many fair value gaps, everyone. It's not just going to be one. You can target many fair value gaps. So what Ashley said there's correct. Yeah, you're correct. Yeah, excellent. Yeah. So the reason, yeah, you're correct. So essentially, you're going to be targeting any fair value gap that's in the premium, you understand? So we're buying from discount to premium, and that's our third concept of PD arrays, from premium up to discount. So again, be mindful of NFP. NFP can do what it wants. Okay, but this is really how we approach any market using the interbank price delivery algorithm. Does everyone understand that? Does everybody understand it? Does everyone understand that? So when it comes to buy side delivery, high prices, we always want to be targeting 2 things. So I suggest anyone who's writing notes, highlight this in your notes, underline it. I'm going to take a screenshot as well and put these 2 things so people have access to it. You know, I think it's very important that people really have this consolidated in their minds, in their heads, right? Oh, sorry, I've just sent that. Not one. Really understand this concept of targeting fair value gaps and targeting liquidity, because this is the only reason the market would actually move up. There's no other reason for the market to move up, right? The market moves up for this reason. And that being said, we're going to go on to people's favorite topic now, which is the AMD, which is what I'm sure people have been waiting for that one, yeah. So the AMD is essentially going to be used. The reason I started on the higher time frame is because if you don't have a higher time frame understanding high time frame narrative, there's no point going on the lower time frame because it doesn't make sense at all, right? So to go over the AMD, which is what I'm sure people are interested in me going through, I'm going to dissect a trade that was taken on, when's the trade taken? Not this one. A trade taken on recently on Monday. This is Monday's trade. I believe it ran 1 to 3 or 1 to 2. Let me see. 1 to yeah, 1 to 2.5, 1 to 2.5. Yeah, exactly. Exactly in between. So I'm going to be going over that trade in detail now, starting from scratch. Okay, so now I'm gonna pose a question for people to understand. I'm gonna pose a question. I'm gonna put the Asian range up, right? So this is Monday. This is now Monday of this week, Monday the 29th of January, right? This is Monday, and this Asian range is Tuesday. So this is Monday. So this was in, and it was Monday. This was the 30th, right? So this was Tuesday. Now I'm going to ask people, based off the price action that I've been through, right, on the 4 hour time frame, we had a PY in the discount at this point on Monday and Tuesday was respected. Should we be looking for buys or sells? So on Monday, what was my narrative? What was my bias on Monday going into Tuesday? Monday and Tuesday, what was my narrative? What was my bias? Who can answer that question for me? Nice and simple. What was my bias? What was my narrative? Uh, so Stace says bearish. Who agrees with Stace? Bullish. So Stace has said bearish and Sam has now said bullish. So I'm confused. Who's correct? I've been given two different answers. So who's correct? Okay, so people who think correct, react to Stace with a heart or whatever you want to react with. And if Sam is correct, react to Sam's message. So who's correct? Bullish or bearish? For an answer. So only one can be correct. Based on the screenshot I just provided above, what do you think? What do you think my bias was going into the week? It going on into this day, Monday, Tuesday of this week, day that Stace reached out to me. Come on, people, have some answers. Look at the price action in front of you. Stace, if you think Sam, if you think my bias was bullish, why do you think that? Stace, if you think my bias is bearish, why do you think that? Okay, Ash thinks bearish. Bearish, bearish, bearish. Okay, so in fact, Stace has given me the answer I actually wanted. Stace's answer is correct. Yeah, but I think a lot of it was because my question wasn't posed 100% clear. Sorry, still at work, so watching and listening. Sam, no worries. Okay, so what Stace has said is correct. So we were bearish. The 4 hour time frame, we had a POI over here, right? We had a POI just in this region, right? Okay, so if I give so this was our POI, this one over here, right? So up until price mitigated this POI, we were bearish. So all of you are correct in saying that. However, at the POI, it's a valid POI, right? At the POI, what happened? We had a change of character, and that's exactly what Stace has identified. At the POI, we had a change of character. So the narrative switched from bearish to bullish, right? We had a switch in this region. We had a switch in this region. So the people understand that. So my narrative was bearish up until the POI was mitigated. And then we had a change of character, like what Stacey said, right? So the bias changed over here, right? Change of bias. People understand that. The people understand why there was a change of bias. The people understand why there was a change of bias. I'm actually said bullish, and that was the answer I was really looking for actually. But I guess I didn't pose my question well enough, which was a mistake on mine. I don't know. You were Sam. You were the answer I was looking for. Actually, you were right. You were fully right. But then I realized my question wasn't 100% clear. It's cleared it up for me nicely. So we were bearish up until we had the change of character at roughly 3 o'clock in the afternoon. Now from here, how did I frame the trade? How did I get in the trade? How did I frame the trade? Right. This is the infamous AMD model that we're going through. To everyone, people take notes, get their pen and papers out because you're going to need to take some notes because this is essentially ICT on the lower time frame. The famous AMD, right? Is AMD or the power of actually my favorite concept in ICT. But the mistake a lot of people make is that they just jump straight into an AMD model. The AMD is great, but if you don't know where to take the AMD and why you're taking the AMD, it's essentially pointless, right? You need to start from the higher time frame and build a narrative and work your way down with price, right? So the AMD is only as good as your higher time frame narrative, right? So I'm going to write that. I'm going to write that over here. Only as good as your higher time frame narrative, everyone. So if your higher time frame narrative isn't good, isn't strong, right? If your higher time frame narrative isn't good, you might as well get the power of three. But we've been through the higher time frame. We started on the weekly, then the daily, then the 4 hour. I also use the M15, but I've left that out, right? Just to speed up time because we've got about 10, 15 minutes left. So we're going to be going over the AMD in a bullish scenario, right? Because I took a buy trade here. This was where price changed from bullish to bearish. So we're going to be going over a bullish AMD scenario, and the same thing applies for bearish AMD scenario. So now we're going to be going over session timings. We're going to be going over the concept of accumulation and then manipulation and then distribution, right? We're going to be going over one specific entry model that was taken, but there's 3 entry models that can be applied to this. We're going to go for one of them because only, of course, one of the 3 presented itself. Okay, so with that being said, let's go. Now we start with the accumulation in price. This is the accumulation. Okay, I'm going to make that bit clear. We start with an accumulation in price over here. This is our accumulation in price. Right, this is what the A stands for, the accumulation, right? So can somebody tell me what's the purpose of an accumulation? What does the accumulation actually give us? What does the accumulation actually present? Who can tell me what it represents? This is the accumulation, and I'm going to label it orange, the same as the chart. So this is the accumulation. Liquidity. Both of you have nailed it. Stace and Ash, perfect. Liquidity. The accumulation builds liquidity. It is essentially the Asian range. One question I always get is, oh, liquid effects, what's the Asian range timing? What's the Asian range timing? What timing should I use? Right, now, clear this for everyone, okay? The Asian range timings are PM, midnight. Now, people are going to ask, oh, no, that sounds a bit wrong. Eastern Standard Time, New York time. Eastern Standard Time, New York time. So wherever you are around the world, whether you're in America, whether you're in Australia, China, Singapore, Japan, Dubai, whether you're in Antarctica, please change this to your time. It's very, very important. You calibrate these timings to wherever you are around the world. 8 p.m. to New York midnight, to midnight New York time or Eastern Standard Time. So for those of you who can write notes, please write this down in your notes because I get this question all the time from members and just on my YouTube channel. I get this a lot from all sorts of people in the private community and public community. I get this a lot. So for people who can write notes, yeah, so UK is 5 hours ahead of that. So I'm in London, I'm in the UK. UK is 5 hours ahead of New York. The reason I'm giving it in New York time is because ICT is from that part of the world, right? And everything is calibrated to New York Central Time, right? New York time, Eastern Standard Time. So wherever you are around the world, please calibrate this to your time, right? So if you're in the UK, it's going to be from 1 a.m. to 5 a.m. in the morning, right? I'm giving all the times in Eastern Standard Time just to keep it just to keep the base clear the way it is, right? So we see the accumulation. Now the accumulation is essentially price building liquidity, right? This is the liquidity building stage of the market, right? Now from this range, there's two things. There's 2 points of liquidity. It's the Asian high and the Asian low, right? So the Asian high, I'm going to just make my drawing a little bit easier to understand. I'm getting rid of the timings, everyone. So hopefully people have written this down. I'll recap it at the end anyway. Now, the accumulation or the Asian range has 2 data points that we're interested in. The Asian high and the Asian low, right? The Asian high this is going to be pretty self-explanatory. So the Asian high is the top line and the Asian low is the bottom line. Now from here, the Asian high and low represent data points, represent liquidity points in the market that we're going to use in our second stage of the AMD model. So first we start with the accumulation. The second stage is the manipulation. And this is how price does it, right? So if we just go here in price, we're going to dissect how price actually did that, right? So we start here with the Asian range in orange. So this is the accumulation. So this is the accumulation. I'll make it a bit bigger. So this is the accumulation, right? We have the Asian high over here that's been marked out. And we have the Asian low over here that's been marked out. First, what we see is price rallying up, right? Giving us a sweep of the Asian high. This is pre-London, I believe. Yeah. London session typically starts from London sessions. I'm going to switch back to UK time. Sorry if this causes any confusion. Yeah. Right. So London session or the London kill zone. People ask me, oh, to London kill zone, right? We have it 7 a.m. to 10 a.m. I personally have it from 8 a.m. to 10 a.m. The reason I have it from 8 to 10 is because the London market or the European market opens at 8 a.m. UK time. This is UK time, right? But anything that happens before 8 a.m. is considered the pre-London or the Frankfurt session. So we don't really focus too much on that. You don't really need to focus. You don't really know that. It's just something you get for your extra knowledge. The London session is from 8 to 10 UK time. So before that, what we see is we see price rally up in this region. So we see price rallying up in this region. So this is like price rallying up, sweeping the Asian high. So the Asian high, the Asian high, right, bigger. The Asian high gets swept pre-London. So if I go down to the schematic over here, the Asian high gets swept pre-London. So what we see here, we see price sweep the Asian high. So we see a sweep of the Asian high before price tears down. Now, what's the purpose of this sweep pre-London? Why did price actually do this? Why did price actually do this? Now, what was the purpose of price actually doing this? Why would price sweep the Asian high and then go lower, right? What's the purpose of this move? Liquidity and sell stops, yeah. So essentially what Stacey said is correct, but from an ICT standpoint, this is the manipulation. This is manipulation phase 1, right? So this is our second entry model. So we have 3 entry models that I teach. This is just coincides with the second entry model. There's 3 entry models. I'm only going to go over 1 today, but all 3 are quite similar and they all follow similar steps of the AMD. So this is manipulation. Manipulation phase 1. Manipulation phase 1. Now the manipulation phase 1 will aim to entice early buyers. This is the purpose of this move. So early buyers are enticed, right? So this entices early buyers, right? So this is a manipulation phase of the market, right? Early buyers. Now when early buyers get enticed, what we see is we see a rally down after that. We see price rally down. So what do you think happens to these early buyers? You guessed it. They all get stopped out. They all get wrecked by the market. They all get wrecked. All of them get wrecked by the market, right? The manipulation phase 1 is early enticement of buyers. Early enticement, right? You don't want to be trading before 8 a.m. UK time because that's the pre-London or the Frankfurt session. So the volume of London hasn't really kicked in at that point. And so therefore, because of that, you need to be mindful that this is simply price manipulating, right? This is our phase 1 of the manipulation, and this is one of the entry models we use. Now, what happens after that? If we just go and dissect price again, we've seen a sweep of the Asian high, and now price is teared down, giving us a sweep of the Asian low, right? And we see price tearing down all the way into the POI in this region over here. So all of this over here into the POI. We expect price to come into the POI. So we're only looking for buys after it mitigates the 4-hour POI. That's important to understand. And this is why we have a higher time frame narrative in the first place. This is the reason why higher time frame narrative is important. It's so crucial when it comes to your trading. wait. Be patient and wait for your higher time frame narrative. Okay. So now that we've seen a sweep of the Asian low into the POI, so now we see this, right? So this is a manipulation phase 2. So I'm going to make it slightly simpler on the schematic. We see move down before giving us a break of structure, right? So now we've seen this over here. So what was the purpose of this move? Why would price do this? This is manipulation phase 2. Phase 2. Now, ICT concept, some people call it the Judas swing. Some people call it a turtle soup. I prefer to call it a Judas swing. Simply, they all mean one thing: manipulation, right? Manipulation. That's all it stands for, right? That's all it is. So first we see manipulation phase 1. After the accumulation, placement of early buyers. Early buyers get swept out as we come down. Early buyers get swept out. And we see an enticement of what? Who gets enticed now? Sellers. So if you don't understand the AMD properly, you could essentially buy early, get stopped out. You could sell early and get stopped out as well. If you don't understand patient to wait for higher time frame order flow and higher time frame intentions to play out, and you need to understand sessions and timing. And this is very important, right? Sessions and timing is very important. This happened in the New York session, right? So this happened when New York and London were both operating in the markets together. Euro dollar. So we see the European market and the dollar market, the US market, operating at the same time. And that's when you want to be entering the market, right? So we have the London kill zone, which identified above from 8 to 10 UK time. There's also the New York kill zone as well. The New York kill zone. Now, what is the New York kill zone? New York kill zone. This is your New York session, everyone. New York session. 1 to 4 UK time. Again, please write that down in your notes, everyone. Please write that down. 1 to 4 UK time. Okay. So from here, what do we see in price, right? I'm just going to quickly go through the schematic now to finish it. What we see over here is we see price sweep the Asian high. Then we see price sweeping the Asian low over here, right? Giving us what we call the Judas or the low of the day. Now, the Judas swing is typically the low of the day, right? The Judas swing coincides with the low of the day, okay? This is our manipulation or Judas swing. Manipulation phase 2. Or the Judas swing or the turtle swing, they all just the same thing. Manipulation phase 2. Now, what are we looking for now? Now we're looking for an order block, but there's 3 rules to an order block. Do people know what they are? Because for ICT traders, I meet a lot of ICT traders, unfortunately, that don't know this, and it's like the basics of ICT. There's 3 rules to an order block, and we've been through them already. I'm going to draw them on the chart. Here's one. Here's one. Here's 2. And here's 3. This is our order block here in gray. Our order block is here in gray. What makes an order block, everyone? What makes an order block? I'm not going to continue until people ask me this question. It has to be in gold, projected by a fair value gap. So not in gold. In gold isn't one of the rules, right? But if you're talking about basic ICT concepts, in gold is not one of them. An order block is 3 specific rules, and I'm going to go over them very quickly. Represents a break of structure. It has to leave a fair in this region, right? And we see a fair value gap that's been left here in this region, right? So we see a fair value gap. We see a fair value gap. We see a structure. And we see it priced in the discount, right? So we see it priced below the 0.5 level, so in the discount. Look, but we've been through these rules already. We started on the weekly time frame with these rules, right? With a structure break, a fair value gap, and a discount rate. So this is our new structural range, right? The swing low to the swing high over here, right? So this is our dealing range, our new structural dealing range, we have a breaker structure, a fair value gap, and our order block is in the discount. It's not a surprise that we started on the higher time frame, on the weekly time frame, with these rules of structural dealing range, fair value gaps, and premium and discount. Now we've come all the way down to the 5-minute time frame, and we have exactly the same concepts. The same concepts playing out. Okay, we have it's not an accident, right? So we started on the higher time frame on purpose. Remember when I said the markets are fractal, I really meant it. So what happened on the week time, on the daily time frame, happened on the 4-hour time frame, happened on the M15, and now we're here on the lower time frames on the M5, right? So this was a trade taken on Monday. I believe my entry was not as precise as this, I'll be honest. My entry was slightly above the order block. I had my stop loss just above the Judas swing low, and I believe I targeted the high from London. I think it was a 1 to 2 or 1 to 2.5. I can't remember what it was exactly, 1 to 2 or 1 to 2.5, something like that. I think it gave a 1 to 2.5, just under a 1 to 3 trade. Excellent trade, great trade to start the week. This was a trade that went Monday, Tuesday into, I believe it was Monday. Yeah, Monday, Tuesday into Wednesday, actually. Quite interesting. Yeah, but that's essentially how it worked. Yeah. So this is the AMD that people are interested in. I'm just going to finish off the schematic over here. This is the AMD. So we have accumulation phase 1, accumulation phase 2, and then we have a breaker structure. Now that we've had a breaker structure, we enter off a fair value gap and we target a 1 to 3, just over here, 1 to 2 or 1 to 3. Nothing crazy, right? 1 to 2.5, 1 to 3 is fine. Enter off an order block. OB entry, right? OB entry, order block entry, right? We want to see a breaker structure, we want to see a fair value gap, and we want to see price respect PD array, right? So we want to be buying in the discount, selling in the premium. Right, so that's the AMD model. And that's essentially all I had for today, really. We can go into specific topics next week or something if people want, but that's essentially my first live stream, really. So I think we'll be going for just under an hour. So now I'm going to open the floor up to any questions that people may have. Any questions, queries, anything that people had from the webinar. Please feel free to unmute yourself and ask. But yeah, that's me done for today. I'm going to stay around for about 5-10 minutes to answer any questions. When everyone seemed